The reasons to own gold have never been more obvious, and the returns on gold miners have been absolutely crushing the market. And in this video, I'm gonna lay out why it's about to explode from here, but more importantly, I'm gonna lay out exactly how I'm setting up my own gold portfolio with percentages, with breakdowns, and I'm even going to give you some actual names and symbols so you can start setting up your own gold portfolio just the same way. So stay tuned. All right, welcome back. If you're new to the channel, my name is Mark Moss, and I'm so happy that you stopped by to check out some videos. I'm happy that you want to build on your own financial education because you get it, right? You understand that the only real security we have in life is to build on our own education, to rely on ourselves, to make our money, grow our money, protect our money because the system is broken. Now, if you like these topics, click the like button so more people hear about those topics. Of course, hit the subscribe button and the bell notification so you're notified every time I put new videos out. Now, if you're not new to the channel and you've been here for a while, then you know that I absolutely love hard, sound money. Of course, Bitcoin, of course, gold as well. And this year, the gold miners have been absolutely crushing the market. One gold position I mentioned on this channel just a couple weeks ago is already up about 100% already. Now, I've typically stayed pretty general in my advice, but so many of you have asked me for more specific information, more specific training, specific assets, things like that. And so there's been a couple videos recently that I've given you a little bit more. The feedback, the comments have been absolutely amazing. You're asking for more, so I'm giving you more. I do listen to the comments, so here we go. Now, I figured I would dig in and show you exactly how I set up my own gold portfolio so I can crush the market, so you can crush the market. I'm gonna give you the levels, the percentages, and I'm even gonna give you a couple of actual names, like I said, so just make sure you stay all the way to the end. Also, everything that I'm gonna mention in this video is linked in the video description, so you can go see it all right there. Sometimes people aren't, it's not clear what I'm saying or whatever, so everything's gonna be linked in there as well. But before we get into that, before we get into the what, let's briefly look at the why, all right? Why the gold market is about to explode from right here. I know some people think we're late in the game. I think we're very early, and I'm gonna tell you why right now. So, of course, you probably already know this. If I flash back in history, gold has been money for about 5,000 years. This means anyone and everyone owned gold and stored their wealth in gold at one point, right? But over the last few hundred years, 200-300 years, its use as a store of value has really become less and less and less. And really the big turning point was probably back in 1694 when the Bank of England was formed. All right, so that's when we first started getting the central banks, the fractional reserve system and stuff like that. And then finally in 1933, probably the final death knell, when the US made it illegal to own gold, it confiscated all the gold from its citizens. So the ownership of gold has probably just continued to dwindle down lower and lower and lower from there. Now, I've tried to do lots of research on this, and it's pretty much impossible to find out what the private ownership amount of gold is because, well, it's private, right? People don't disclose that. They don't have to disclose it. However, based off of newsletter polls that I found and things like that, it looks like we can estimate that between 1% to 3% of Americans own gold. Now, in countries like India, that number is way higher. In countries like China, that number is lower. So it just kind of varies. So the 1 to 3 is probably a pretty good average, but that's private gold, all right? Where we do have better vision is in the public sectors because, well, they're public. They have to release their financial data. Now, according to Rick Rule, if you don't know Rick Rule, he is a gold and resource investing legend. He said that for the last 3 decades, the mean, the long mean, like the average, the gold ownership has been between about 1.5 to 2% of the portfolio. So that's been the average, about 1.5 to 2% of the portfolio. However, today, more than ever, he said that gold ownership is way down. As a matter of fact, a recent bank study, which he quoted, says that today, savings and investments assets in the United States involving precious metals or precious metal securities make up only between 0.3 and 0.5. So that's way down. So we're from 1.5 to 2 down to less than 0.5%. So ownership is well below the mean for the last 30 years. And of course, you know, with markets, it's always trying to get back to the mean. So when we snap one way too high or one way too low, you always look for it to revert back. Now, imagine, if you will, what would happen if these institutions got back to 1% or 2%, right? Imagine what a couple percent would move the market. And again, that's to the 30-year mean. Well, it might actually be happening right now. Now, according to a quote from George Garrow, he's the managing director of RBC Wealth Management. He said that more and more pensions are going to need to protect themselves against rising inflation and the falling value of currencies. And they are going to be looking very closely at gold, end quote. There you have it. More and more people are going to start looking at this because they have to. And of course, they already are. As I reported a couple weeks back, the news basically rocked the world. I did a video on it. Warren Buffett's firm, Berkshire Hathaway, surprised gold investors, surprised the world basically after filings showed that they had bought nearly 21 million shares of Barrick Gold. Now, Buffett's move into gold was pretty surprising, but what it really did is it opened up the doors for more fund managers to follow suit, to copy what he's doing, except instead of playing in a $100 trillion equity market like they're used to, now they're dealing in barely over a $1 trillion in investable gold, a tiny little market. So what that means is that if the fund becomes a trendsetter in the industry, and if others start to follow suit, then you better look out. The market could absolutely blow up. It could literally go parabolic. So gold's catching the eyes of the biggest investors in the world. And with the price climbing to new all-time highs, and with central banks around the world, printing fiat currencies to basically unseen levels, suppressing interest rates at levels never seen before, it's all leading to winning over a much larger and wider base of pension funds, insurance companies, and private wealth specialists. Now, Buffett is, in the opinion that inflation is going to be so high that gold is going to be, particularly important to own rather than just owning businesses. And gold's recent price increase means that it's producing annual returns while about $15 trillion in government bonds are negative yielding, meaning they actually have to pay to park money there. So why not put it in gold, right? Well, of course, that's exactly right, which is what Buffett did. And then following Buffett's lead, we've seen another giant entry into the gold space. This is where it starts getting exciting. The Ohio Police and Fire Pension Fund, OP&F, they approved a 5% allocation into gold. Massive, right? That traditionally 1.5 to 2% would be average. We're about 0.5% now. They approved a 5% allocation into gold. Now, this is to diversify its portfolio and hedge against the risk of inflation. Exactly what I'm talking about. Now, the fund currently holds about $16 billion assets under management, AUM. So that's about an $800 million move. That's pretty massive. What happens here now is interesting. They said, quote, "The addition of gold will give the portfolio a strong diversifier to its growth-oriented investments, as well as provide an effective hedge against inflation," end quote. So what's interesting here, or I should say, what's interesting is what happens here, right? Because Buffett's move worked out great for him. He made a lot of money, paid off big for him. Now this firm jumps in. And if it works out well for them, then other institutional investors, they're going to have to follow suit. They're going to have to follow suit so they can keep up with the market. Nobody wants to fall behind. Of course, as another pension jumps in and they do well with it, like I said, more people will be forced to jump in. And as each one jumps in, billions of dollars comes in. And when billions of dollars comes in, it pushes the market higher, which means more people have to jump in, which means more dollars, which means it pushes up higher, which means more people. And it becomes this spiral, this self-fulfilling prophecy. And that's the exciting part. And with the trend of institutional investors jumping in, as Rick Rule said, there simply isn't enough gold available. There's just not enough gold. It's a very small market, and there's not enough for every pension fund to come in and make the same 5% allocation. So they got lucky, they got their 5%, but there's just not enough room for everyone else to do that. But imagine if they tried. All right. So now that I've set the stage for you, brought you up to current events, let's dig in a little bit into the portfolio to show you how I'm taking advantage of this gold market and how you can do the exact same thing. All right. So the first is you need to understand the gold sector and understand the gold market. I get a lot of comments of people asking me how to invest in gold. And so this is it. So I like to think of the gold market and investing in gold is 4 different sectors or 4 different types, whatever you want to call it. All right. So the first is physical gold, right? You have physical gold, that's bullion, gold bars, coins, things like that. All right. The second is you have major gold producers and royalty companies. So these are the big companies. The third is you have small producers and junior miners. And then the fourth level that I look at is you have the explorers. And these are the ones that are out there finding the gold. Now, As you might imagine, the physical is the safest. You own it, you hold it yourself. It's the safest. The price doesn't really move much either way. It's the least volatile, which means your risk is lowest, but your potential returns are also lowest. Now, as you work your way down on that list, all the way down to the explorers, your risk goes up, but of course, your potential returns go up. So I typically like to invest in the first 3 sectors that are all physicals or producers. The junior explorers, for me, it's a little bit too risky unless you're really specializing in gold mining stocks, all right? So you really want to have some good expertise and really have a good portfolio for that. So typically I stay away from that. Now, physicals, majors, juniors, all producers. And then what I do is I invest different percentages into each of those categories according to the risk, right? We always want to manage our risk based off of the allocations and position sizes. So let me give you some actual names and some percentages so you can start your own gold investment portfolio, all right? So the first gold, the first is physical gold. So I'm not gonna spend a lot of time here. You get physical gold, right? Bullion, bars, coins, etc. like I said. Now, depending on what country you're in is going to determine where you can buy it, where you should buy it, etc. Now, as a U.S. resident, there's 2 different places that I use. I buy it online. I can take delivery. I have it shipped to my house. I can have them store it for me. I'll put a link in the description if you need to know more. I think one of them does work for some international places as well. But for allocations, I would put about 20 to 50% of my gold allocation into physical metals. That's how I break that up. All right, so about 20 to 50% of my gold allocation into physicals. The next level is the next level down is the major gold miners, the major gold producers. Now, these are the largest, these are the most stable companies that are in this sector. The biggest, the oldest, the most familiar names, of course, right? Like Barrick Gold, like Warren Buffett recently purchased. The trick, however, is to find the undervalued companies and then, of course, also knowing which ones to avoid. So you want to get in before Warren Buffett arrives, not after. Now, one company that I've been buying just for this allocation is called Gran Colombia Gold Corp. It's GCM.TO. Of course, like I said, I'll link to it in the description. Gran Colombia Gold Corp. Now, you might have heard of this company. You might have heard of it on this channel. I was first introduced to it when I was doing an interview with a billionaire mining expert recently. This company is still pretty much under the radar, but they are a leading high-grade gold producer in Colombia. They have about a $365 million market cap, so not small, but not the biggest either. But they're pretty tiny compared to the largest players like Barrick, like I mentioned. But they are one of the top 5 highest grade underground global mines in 2019. So they're pretty big, right? They produce about 200,000 ounces per year big. So that's a good size as far as I'm concerned. But what I really like about Gran Colombia is they own shares of other publicly traded gold stocks. Ones that I like, including about 45% of Caldas gold, that's worth about 76 million. They also own about 80 million of Gold X Mining, which I've mentioned before. And that stake is worth about 80 million. So Gran Colombia is not only a high-grade leading producer, but they're also sort of like a gold fund, right? They invest into other great companies. So by doing that, you get more broad exposure to their interests. You get more broad exposure to the market through different miners. Now, these other companies that they own interest in alone are worth about 200 million Canadian dollars, but Gran Colombia's market cap is only about 360 million Colombian. So if you back that out, and then you factor in that they're doing about 200,000 ounces per year in their mine, then that 200,000 ounces they're doing is priced at only about 160 million Canadian, which is nothing. I mean, compared to what you see in the market, compared to its peers, it's a really, really, really good value. I think the market is undervaluing them based off of the other assets they own, in my opinion. Now, companies that produce that much could be worth, much, much more, like I said, if they didn't have those other assets. So I think they could be worth way more for your portfolio. Now, for this sector of my portfolio, I'd put about 30 to 50% of my remaining gold allocation in these major producers, all right? The major producers like Gran Colombia. Now, I wouldn't put all of it into one single company, but I would spread it around into companies like this. I'm only going to give you one name for this one, but that's what you want to do. 30 to 50% of your remaining. All right. Now for the next section, the small producers and the junior miners. I've given you the names of some of these recently. There's a couple videos I've done recently. Some of them were up like 50 to even 100% since I've mentioned them. So hopefully you got some of those. And if not, you can go back and watch the old videos. Just go onto the channel, go to the playlist and look at the gold playlist and look at some of those recent ones. But another one that I really like for this sector is called Caldas Gold Corp. Now, this is another gem that's it's under the radar. Of course, as an investor, that's what I'm always looking for, something under the radar. But as I mentioned above, Gran Colombia owns 45% of Caldas. So since they were spun out of Gran Colombia, now this also means that they've been a gold producer since day one, and they have some big help from Gran Colombia, all right? Now they're small. They have about 185 million market cap, and they're currently producing about 25,000 ounces per year, which is small. However, they have a very big and aggressive expansion plan. It's pretty aggressive. They plan to get to about 50,000 ounces by next year, 2021. And then after spending on a major expansion plan in the deep mineralization zone, about, I think it was a 270 million CapEx, in the coming years, they expect to get to about 200,000 ounces per year by 2023. So in about 2 years, that's about an 800% increase in production. And of course, you can imagine what that's going to do to the price. Now, Randy Smallwood is the CEO of Wheaton Precious Metals. If you've never heard of it, you probably should if you're in this space. They're a really big company. He is like the who's who in the gold industry. He's regarded by many of the mining experts as maybe the best executive to ever live because he's been the best deal evaluator. Now, he's committed $110 million in a streaming agreement, and through WPM, Wheaton Precious Metals, they've also taken a position. So for your gold portfolio in this sector, I'd put about 10 to 30% of my remaining gold allocation in these junior small producers. Like Caldas Corp. So we're putting less and less as we go down because of the risk, right? We're risk adjusting. Now I'm gonna give you one more name that I like for this same sector as well. This one is small. It just barely squeaks into my range. Like I said, I really like the producers. I don't want to go with just the explorers. And I'm talking about Winston Gold Corp. All right, their symbol is WGC and WGMCF. Again, I'll link to it in the description. Now, if you watched my other gold mining videos, right, where I've broken down how I evaluate these companies, what I'm looking for, then you know that the very first thing I look to evaluate is the team. The reason why is because a good team won't go to a bad project. So the way I look at it is if you follow the team, then you're usually going to do pretty good. So I look at that first. If it passes that, then I will continue on. Now, I found Winston by following a guy named Joseph Caraba. Now, Joseph Caraba, he came over from Newmont, which is the world's largest gold miner. And not only did he leave the world's largest miner, to leave there to come to Winston, but he also dropped a bunch of his own money into the project. He owns about 15% of it. His buddies, his associates own about another 20% of it. He left the largest gold miner in the world, like I said, left a huge cushy job, about $300,000 a year salary. So when I see someone willing to give up a $300,000 a year salary, the largest company in the world, and put their own money in, I think they know something I don't know, and I want to be with them, right? I would imagine you do too. We always want to bet on a good team. Now, when looking deeper, we can see that they're one of a few companies that are actually putting their projects into production. Like I said, we want producers. And so that's a real opportunity for us. They're a small company, but they're a producer. They have a great team. I think the market is really undervaluing them. Currently, they're trading for only about 12 cents Canadian. I talk about Canadian prices because a lot of these are on the Canadian Stock Exchange, the Toronto Stock Exchange, just if you're wondering. So it's about 12 cents Canadian. But I think by looking at the projected cash flow analysis, that if the Winston project commences production, it should be trading for, I would say conservatively, about 50 cents. So to go from 12 to 50 cents, it's a pretty big move. Again, like I said, it's pretty undervalued. Now, I come up with that number just kind of by comparing to other similar mining companies. Those aren't my own words. That's just kind of what the market's saying. That's what the math is saying, all right? Now, the reason that I think that no one else is really talking about this is because the company, it's not new, right? It didn't just have an IPO. They didn't just have this big splash. But in the past year, it's undergone some big changes, about a 180-degree transformation, and it's all been kept under wraps. Again, I found this just by following the team. That's how you find the good deals. So again, for your gold portfolio in this sector, in the junior producers, I'd put about 10 to 30% of your remaining gold allocation in these. You can split them up, positions like Caldas and like Winston Gold that I just said. Now, there you have it. This is how I set up my precious metals allocations. There's 4 sectors. I invest into 3. I gave you the percentages for each one, and I gave you a couple names, all right? You can go find some more names now that you know what you're looking for, but you have the assets, you have the categories, you have everything else. Go back and look at some of those other videos in the gold playlist to see what some of those other names are that I mentioned. But I want to give you a couple things to remember, all right? A couple key things here. First, this is a long-term trend, all right? This is a long-term trend we're watching unfold. I gave that to you in the beginning. Buffett, Warren Buffett, the pension funds, they don't day trade, right? Buffett, the pension funds, they are not day traders. They take positions that are going to be there for years or even longer, all right? So you need to have the same mindset. Don't look at this as like, I'm going to get rich tomorrow. This is a long-term deal. Also remember that a gold allocation is only part of your total investable assets. So that means I wouldn't put 100% of your money into gold, right? It's one part of your total investable assets. Also, always remember, never invest more than you can afford to lose. My rule of thumb is that if you're nervous about losing money, if you're having trouble sleeping, that means that you have too much in. All right. If you're worried about it, that means you have too much money invested. Pull some money back out, put it on the sidelines, and let it sit there like that. But there you have it. That's how I set up my gold allocations, and you can now do the same. Let me know in the comments what you think. Do you agree with those categories and the allocations, or do you see it much differently? Go ahead and tell me, leave me in the comments down below. Of course, as always, give me a thumbs up on this video if you like it. I'm working hard out there for you. I'm doing this because you've asked for it. If you don't like the video, that's okay. Give me thumbs down. All right, but leave me in the comment and let me know why so I can continue to produce more content just for you. All right, that's what I got for you today. To your success, I'm out.